Okay, today we're going to talk about trend days. Let me ask you a question. Is it possible to know if the particular equity or index or bond, dollar for that matter, you're going to trade, is it possible to know if it's going to be a trend day? And I'm going to tell you absolutely it is possible to know if it's going to be a trend day. It is possible to know if it's good. Well, I shouldn't say possible. It is possible to know if the probability favors a trend day or if the probability favors a range day. This particular video is going to focus on trend days. I'll do another video later on range days. But I just want to focus on trend days in this one. So is it going to be a trend day or range day? That's what we're looking for when we trade stuff. Why? Because as the saying goes, a trend is your friend. You jump on board, you ride that train, you milk it for all you can. Whereas range days, you're scalping highs and lows, right? So for me, trading trend days is just a lot easier. So what we're looking for is we're looking for volatility, impulse buying and selling, and a range expansion to help define a trend day. Wyckoff, he's probably the father of defining range and trend days. Wyckoff, Wyckoff, I believe. Check that out real quick. Wyckoff. Yeah, the Wyckoff method. And you'll look right there, it's Wyckoff Analytics, Wyckoff method. You can learn more from the father. He figured all this stuff out back before there were computers, when you had to get the newspaper and do what's called paper trading, where the term paper trading comes from way back then. He's the one that started all this. This is just, I guess, taking that and putting it a little more modern day, I suppose. But anyhow, let's go. Let's define in trend days. Trend days have these things in common. They typically have a large opening gap, up or down, depending on if it's going to be trend up or down. Higher highs, higher lows in the case of a trend up, or lower highs and lower lows in the case of a trend down. Rising moving averages in a trend up, or falling moving averages in a trend down. Pullbacks in a trend up, or retracements in a trend down to the moving average. Bull or bear flags. We'll discuss a little bit about trading bull or bear flags towards the end of this video. Let's take a look. This is American Express a couple days ago. You notice here we have the opening gap. Here we have a rising moving averages and a retracement. That's the 20 EMA, and I got this is 50 EMA. So we got a retracement to the 20 EMA, and the price goes up, takes out the previous high, right? Then it comes into the lunchtime chop, and then the afternoon pullback. This is absolute textbook trend day right here. Not all of them are going to be textbook like this. Sometimes you're going to get parabolic. There is no pullback. We'll talk about how to get into parabolic trends towards the end of this video. But sometimes they're parabolic. Sometimes there is no lunchtime chop. It just keeps on going. Or in the case of a downtrend, it just keeps on falling. Sometimes there is no afternoon pullback. Sometimes it keep chopping or just keep on going. So there's variations of this. But this here would be considered textbook. What causes a trend day? Well, it's order flow imbalance. Is the quick, short, simple answer. Funds and or institutions make large buys or sells on an instrument such as an equity bond or an index. That causes the gap. As a retail trader, there's very few retail traders that can trade enough volume to cause a gap. So it takes an institution or a large fund to do that. Then algorithm, I learned this because I have a mentor who worked at TD Ameritrade and a couple other mentors that actually worked on the Chicago option exchange floor, and they explained how algorithms work to me. And algorithms, they said, typically will buy into buying and sell into selling, and this keeps driving the price in the direction of the gap. So that's another thing. Stop losses get triggered, also known as the squeeze. Okay, stop losses fuel trends big time. People may have put on positions the day before or weeks before, or whatever, and it jumps in a trend, and the trend goes against what their position is, and they got their stop loss on, and it triggers that. So in a trend up, short sellers have to buy to close their position, right? So there's more buying going. It's going to keep moving that trend up. In a trend down, long sellers have to sell to close their position, right? So that creates more selling, and that drives that price in the direction of the trend down. So stop losses are a big part of the reason why trends keep on going. Another big part is those fighting a trend. They just absolutely say, this has gone up this far. There is no way it can go up any further. And we're going to look at this once we get on the charts. And so if it's a trend up, they're shorting and they're getting their stops blown out, and it keeps causing the trend to go up. So it's people fighting trends are actually contributing to the trend. Bulls in an uptrend are adding to their positions, or bears in a downtrend are adding to their positions. This causes a continuation of driving the price and the movement of the gap. FOMO, fear of missing out. Latecomers, they just pile in. They want to pile in. Just trend up, and the trend may have been going on for an hour or so, and up there they're like, I got to get in. This thing is taking off, and it just causes that trend to move even further in the direction of the gap. Or sellers come in on a downtrend. Okay. Other things to determine if the probability favors a trend day. Range days are by far more common than trend days. So on any given day, just assume whatever you're looking at is going to be a range day until it proves otherwise. From the range day assumption, you're only looking to see if what you're going to trade can prove itself, prove that it will be a trend day in that particular instrument. Okay, some pre-market stuff to do to kind of help you look for things is do a quick scan of the headlines, see if there's any major news that may have impacted the markets overnight. Look to see what the overseas markets are doing, especially European markets, the DAX and the FTSE. Oftentimes, if they're trend up, trend down, we may follow suit. If they're range, we're probably going to be range too. It's just the way it works. You look at the general overall market sentiment by looking at the advanced decline line, New York Stock Exchange tick. If the ES is trending up, trend up is going to favor equities. If the ES is trending down, then trend down is going to favor equities. You'll see the overall market conditions influence the individual equities. Why? Because those algorithms are buying and buying, selling and selling. Now, it's not everything. You can absolutely find trend down stocks on a trend up day, but you'll notice their percentages are usually going to be quite small unless it's earnings or some sort of news to drive it. And same for trend down days, you can find trend up stocks, but the percentage of the movement is probably going to be small because of the market directions kind of restraining it from going the way it's trying to go. Again, news, earnings, it's a whole different ball game there. All right, we're going to define the windows of a trend day. The golden window, for me anyway, the best time to trade is in the morning. This is the golden window, typically 2 to 3 hours. Then you have your lunchtime chop and your afternoon pullback. Right? Again, like I said, this is textbook right here. So let's take a look at this particular American Express. This was 2 days ago. I picked this one out. You notice we have the opening gap. Turns out it pulls back to the moving average, 20 EMA moving average, giving you an opportunity to get in. At this point, you get in either when it touched it, or you may let it stop falling and start back up, or you may wait for it to break on the other side. Jump in, and then you're looking for a move, either taking out this high here, or you're just looking like I like to do. I like to just put it on and then take it off around 10:30, 11 o'clock or so. I'm keeping an eye on this, see where it peaks out. Me on this one, in here, out, somewhere around here. And then you got your lunchtime chop. I sometimes I'll trade it if we get some big swings in that, but little, 2 and 3 point swings is not enough for me to get involved in the ES or in a stock on lunchtime chop. It's just not enough risk reward for me. And then you got the afternoon pullback. I typically don't trade the afternoon pullback because I just find I do better in the morning than I do in the afternoon. But if I don't have my day done, I'm absolutely going to get in there and find me a trade if I can. So that's textbook here. Let's look at the ES here. It's the ES. This is the last 10 days from the date of this record. And notice here we have gap down, retracement to the moving average, and then the first, 2.5, 3 hours, trend down, right? So you get in here, you're getting out when it reverses down here somewhere. Then you have your pullback. This one here really didn't do much of a lunchtime chop. What, about a whole 20 minutes, 30 minutes maybe of a lunchtime chop, and then you had your retracement. Now, I will tell you, I said range days are more common than trend days. Typically you have 4 to 6 trend days a month on a given equity or stock. Here lately, though, in the NQ and the ES and even the RTY here lately, it seems like if not every day, almost every day is a trend day. Every other day at least is a trend day. It's the market valuation of some of these trillion-dollar companies and multi-billion-dollar companies are just doing crazy things. So we're having to adjust what we used to do to what's actually going on now. So again, on this day we have this particular day we have trend down. It just takes it up and we got that pullback. On this day, this is a failed trend day, and I'm going to show you this again as we go through the notes. Not all trend days work out. The probabilities favor that it will work out, but not all of them worked out. This obviously is a failed trend day. Probably some sort of news. I don't remember. I don't remember what caused that, but I do remember taking a disaster stop that day on this. And I fought the trend down. This is what you call a trend event on a failed day. And I fought that, so I lost money this day. I just did. I have a hard time when it's gapping up to trade against that gap, and I did it on that day, and it cost me money. I just straight up honest with you. But again, here's gap up, retracement, trend up. Notice that. And this one here really didn't have a lunchtime chop. It just kept going and going and going. Had a little tiny pullback for just a few minutes, and then it just shot up into the close. This is one of those alternate trend days, right? And here, no gap, so we just figure range day, even though it had a trend event up. This mind setting that I had anyway was range day with a bull bias, and then it, in lunchtime it pulled back a little bit, and then it continued up, and it just, Now here's a gap up that just turned into a range day. So this is another trend day that failed. This was a trend day that failed. This is a trend day that failed. Another thing I should say on trend days that fail, if it closes that gap in the first, hour or so, consider it a trend day that failed. So you're looking for, if it closes the gap, the trend day model is no longer valid. This one took a while to close that gap. That's why I had such a hard time and lost money that particular day. But it did close that gap. And here's the failed trend day in the sense that it just went trend to range, just about, after about an hour and a half of trading, it just turned into a range day. It just retraced and never really got back on a trend here, never really took out that high right there. And here we would automatically frame this because there was no gap. There's going to be a range day. Obviously, it wasn't a range day, right? So this is something you guys got, be on the lookout for. We're seeing a trend event here. We're seeing the lower moving averages. So that's just a way to look at that. And then again, here's a trend down day that worked for about the first, I don't know, hour. That would be the first hour, would be right here. So yeah, so about the first hour, it didn't last very long, and then that trend down just absolutely failed. Came up here, so you're seeing rising moving averages. You just look, you see that, you say, okay, this trend down day has failed. It's important to be able to know where be able to identify the reversals, like I did not do on this particular day. I'm still smart over that day. And of course, here's a no gap range day. Basically, that's what that is. No gap, you think range day. Gap, you think trend day. Here's a gap up, test moving average, takes out that high, trends up, and then we get a pullback. We really didn't get no lunchtime chop. We just straight up pullback. So that's just a good example. You can look at any stock. You can look at the futures and see this happen over and over and over again, right? So let me get back to my PowerPoint. Let's finish this up. So again, defining the windows continue. Lunchtime chop typically 11 to 1 p.m. Eastern. Traders go to lunch. Volatility backs off. Lunch favors range trading tactics. Afternoon pullback retracement typically at the last hour of the trading day where profit taking occurs. The afternoon pullback retracement does not always happen. Trend days can do fail. That's why it's important to have proper risk management and stop loss tactics. I showed you this exact example on the day that got me. And so how to trade trend days recommended unless you're a very experienced trader that you only trade one side of the tape on a trend day. That would be in the direction of the trend, direction of the gap for the first couple hours or so. There are folks who they're not really fighting the trend day. They just know on them flags, they kind of know how to read it to where when that flag is going to retrace, they're scalping that little retracement. But unless you're really experienced, don't do that. You're going to get a lot of stops taken out. Again, a common method is trade flags. Flags when the price pulls back to the moving average, in my example. Trend up 20 EMA or retraces to the moving average. My example, trend down 20 EMA, exponential moving average. You may want to buy or sell at or close to the EMA and play the price continuation in the direction of the gap. And then close the position when the price reaches the prior high or takes out the prior high or low, and rinse and repeat. That's one very common way, conservative way. Another way, the way I like to do it, is to put the trade on at the first pullback or retracement and leave it until it closes. Leave it until it's close to the lunchtime period when we come into that lunchtime chop. Trade lunchtime with range tactics. You buy high or sell the high, buy the low. Sell the high, buy the low. Use trend lines to determine where your probable highs and lows are. And when a trend is parabolic and there are no flags to trade, these two methods can help you get an entry point. Tick charts and trend lines. I do have a video on tick charts, and I'll leave a link here to show you how to get into it, specifically to show you how to get to a parabolic move, and I'll leave a link in the description below. It's a short video, I don't know, 3 or 4 minutes. But it's to show you how to use tick charts to get to a parabolic move. Rather than go over here, I'm just going to link it to a video I've already created on that. Okay, additional trend day comments. Trend days are not one size fits all. There are different variations of trend days. Trend days and trend events are not the same. Again, trend days, if you don't have a gap, you can't call it a trend day. That's just that simple. You can have a trend event in a range day or a no gap day. You can absolutely have trend events. But a trend day, first and foremost, the biggest indicator is going to be that opening gap. Okay, what works for trend days probably won't work for range days. And by that, I mean moving averages. I like to use moving averages on range days in the sense of watching them wrap up like spaghetti, and I know that, it's still ranging, chop and slop or whatnot. And I like to see when they pull apart, see if we can't get trend events, catch a trend event in that range day. But moving averages don't work well on range days. Again, fighting trend days can absolutely blow up your account. Let's look at DS one more time. Let's take this day. Yep, comes the retracement. So it's going up, 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 and you got your short sell. It just can't go any higher. And he puts on right here, right? Short right here, gets a stop blown out right here. Oh, it can't go in. So he puts the short here. He gets a stop blown out again. So just to know, fighting. And I remember, it was almost 2 years ago when I first started trading ES. I didn't know anything about range and trend days. And I remember I just had like 3 trend day up in a row, and I just made buku money. And then on the 4th day, I was playing that trend day up, and that sucker won against me. And that was my very first experience with a margin call, was on that. I wasn't intentionally fighting a trend day, but that's what I was doing. And what I was doing caused a margin call. That's what happens when you fight a trend day. And it was my ignorance to cause that to happen. It's just I didn't know. I just didn't know anything about range or trend days. I just thought, wow, this is neat. It's easy to make money in the futures. And no, you can absolutely blow your account up. I did. All right. So let's see. We got any more? All right. Trend days are not common, usually 3 to 6 times a month. Like I said, range days are more common. Though here lately, I don't know, 2020 is what I mean by lately. The ES and NQ just did multiple trend days, even back-to-back trend days. It's mind-boggling. And again, like I said, trend days can and do sometimes they fail. You know, trading is a probability game. Gaps favor trends, but it's a probability. You know, 70% of the time they're going to work. You know, 30% of the time they're not. So, and that's all there is to it. I hope this helped. Leave some comments. Like this if you liked it. Give me a like. I'd appreciate it. Leave comments if you want to know something else or if you have questions. I will see you later. Have a good day.